Welcome back to another Calgary Real Estate Market update with us here at Redline Real Estate Group on Redline TV. Today, I'm going to answer the question, how is the market from all the data just released from October 2020? As always, in the beginning, I'll talk about three specific segments. One, the inventory story, the sales summary, and then the pricing picture. After that, I'm going to translate over to our advice segments for buyers, sellers, and investors. Today, as always, I've got lots of information to cover, but I got one quick question for you. I want to hear from you. I'd love to know which segments you love best, and just type us a little comment so that we know how to best provide you the information that you're seeking. But other than that, buckle up, let's go. Okay, let's start off with our sales summary. If you can remember from last month, the sales in September far surpassed 2019. And the question was this going to continue? Well, I'm here to report that it did. The momentum that we had coming out of September pushed all the way through October, providing us an incredible sales month. I also mentioned last month that this was predictable because of the showing tracker that was showing the amount of active buyers actively viewing homes was far beyond where it was the year before. When I look at things as we trended into October, the same story was painted. So it doesn't surprise me at all that October was as strong as it was. And while we're on that topic, let me pull up that big showing graph. You'll see it across the whole screen here, showing how we're doing versus last year. This month, I put up two arrows to signify a few things I want to talk about. The first one, the higher up on the graph, shows where we were when we finished September, right at the beginning of October, when I did this last update. And then the second one shows where we were just right at the beginning of November. Those two lines are significantly higher than where we were last year. So again, as I'm sitting here reporting on October's info, I have a feeling that when I'm here next month, I'll be reporting that November had a significant bump over last year too. If you're a numbers person like me, let me quantify this just a little bit. Currently, we are seeing 115% more showing activity now than we were last year. That's fantastic, and it will set us up pretty well going through November into Christmas season. Okay, now let's flip just to those sales stats so you can get an indication of where they were across all four property types. Now, as a whole, the whole market saw 23% increase in sales throughout the month of October over last year. The one that was leading the pack was our detached market. It saw a 35% increase in sales over last year. Next in line was the semi-detached. It outperformed last year by 21%. Then in third place was the rows in townhouses. It again surpassed last year's numbers by 9%. Okay, the sleepy wheel this month was again our apartment segment. Its sales didn't increase over last year's numbers. It actually saw a decline by 6%. So like always, I sound like a broken record, but every market segment is operating in a completely different dynamic. So just make sure that you're listening through the ears focused on your exact property type. So what does all this mean? Well, October actually produced the second best sales month of 2020. Yeah, second best as we are in the last quarter of the year. This is very unseasonal. Typically, you would see that happening in April, May, June, or July. Not at this time of the year. Let me paint a little wider picture for you so you can get some context on how good October was. So I'll pull up this graph here, and this shows the rolling sales that we were having going all the way back to when we started to come out of the depths of the pandemic. So what you'll see on this graph is the trend line is actually going from lower to higher. So it's going up. When we trace back all the way to the middle part of May, all the way through till now at this time of the year that things are supposed to be slowing down, we still see a trend line up. Very, very unexpected. This to me shows the incredible strength of the second half of the year that we've started to have in July, pushed through in August, and now, as I'm standing here in November, are continuing to talk about. Just like last month, we're asking ourselves, how long will this last? How long can this last? Well, we don't know that fully yet, but that showing tracker still shows there's demand out there. Okay, let me pull up another little sales graph. It's a similar graph to what I just showed you, but this is just now focused on the month of October. And again, the trend line is slightly up. We started a little slower, we finished even stronger. Again, seasonally, we're supposed to be going down. Very, very nice to see. Okay, that's enough for the sales summary for now. Inside the buyers and sellers segment, I want you to hang on till then because there's some critical information that I speak about that takes this info and now what should I do about it? So please hang on till at least that segment. Okay, now let's transition over to the inventory story from October 2020. Let's start off by pulling up this graph right here. This graph shows the amount of new listings we were listing in comparison to last year. What you'll notice is early in the month, we saw those bumps go up. So that means we were putting more properties on the market than we were at the same period last year. And then it starts to taper, and then we start to get near the end of the month where we're listing less. Okay, here's another graph to show this in a slightly easier way to view. This is just for the month of October, and it shows the trend line going down. That means we started the month listing a lot, and then as the month went along, we started to really pull back, normalize down to something that we're more expected to see at this time of the year. Okay, on this third graph, let me pull this one up. This is a big, wider one, and this is going back to that similar timeline I spoke about in the sales summary. In that graph, we went all the way back to the middle part of May and trended it out all the way till now. What you do see is after the middle of May, we saw this pause come off and a bunch of listings hit the market. That's the peak. And that maintained itself through the peak selling months. And then as you'd expect to see, August, September, October, we saw this nice trend line down in inventory. That's where we wanted to be. That's where the trend is going. So that is expected for this time of year. Okay, so what does all this really mean anyways? I'm gonna pull up this last graph around the inventory story. What this one just shows is the total active inventory available to purchase, and then versus last year's numbers. Where we finished at the end of October is at minus 13% from the total inventory that we had last year. This gap, this 13% difference, is the largest gap we've had since the middle of the pandemic. Okay, once again, not all 4 property types are following this exact trend. So let me just hit you with those specifics and then we'll move on. Leading the way with the biggest decline is detached. Once again, it's sitting with 22% less inventory on the market. The semi-detached, again, second place, minus 21%. Very close, a big difference. Just like sales, the row house is in third place again, and it's seeing a 6% decline in its overall listings. And lo and behold, the apartment market is the only one not seeing a decline in new listings. It's actually got a higher amount of inventory on the market, 9% higher than at this time last year. As we're about to discuss next, the inventory story that we currently have really sets the tone for what's going to happen with our pricing picture, which we'll dive into now. Well, here I am once again telling you a good news story when it comes to our benchmark sales price. Now, 5 months in a row, we've seen a month-over-month increase in that price. Again, something nobody predicted in Alberta, hitting the pandemic and being here in the last quarter of the year. Similar to how I mentioned before, the sales summary is outperforming the seasonal norms we expect. The benchmark price is doing the same. We would anticipate month-over-month declines starting to happen as we trickle into the early winter months. So right now, we sit as a city with a benchmark sales price of $422,600. That's up 0.5 year over year. Year over year is one thing, but then it's also interesting to know, how did we do throughout 2020? From the start of the year to where we sit right now, we're reporting a 1% decline total through everything that we've just gone through. So, I mean, I'm giving that a thumbs up. Once again, those 4 markets operating differently. Let me hit you with those right now. Well, guess who's leading the way again? Yes, it's the biggest part of our market. It's the detached segment. Year over year, it's showing a 1.8% increase in its price. Again, in second place is our semi-detached market. It didn't see an appreciation number, but it's down just a little bit of minus 0.9. And here we've seen a shuffling of the deck. 4 becomes 3 and 3 becomes 4. What I mean by that is the apartment market isn't last place when we come to our benchmark sales price change. Despite everything thrown at the apartment market, it's only minus 1.3 from where it was last year. And our last place finisher when it comes to pricing was that row in townhouse segment, minus 5.6 from last year. And just like last month, I'm gonna show this unique graph. This one shows the whole city. So if you want, pause the video, zoom in and take a look. What it is all 8 districts are represented here, both with their benchmark sale price and then how much up or down they've gone. So it's just nice to know which part of the city you live in and how it's performing. If you've been following these for a little bit, you've noticed the last couple months I've been using another chart, a little simple color-coded chart, green, yellow, and red. And I've basically summarized everything into a little chart that I just throw up here on the screen. Again, the details here don't matter a ton. If you want them, hit me up and we'll talk about them. But the big thing is the color coding that I've created is all in terms of will this affect pricing in a positive or a negative way. Green and yellow are trending towards the good, red, pretty apparent, trending towards a negative price. So when you look at this, what do you see? Look closely and you'll see the apartment column. The one on the far right shows mostly red. And then there's one other with the row at the very bottom showing also in red. But everything else on this chart is going the other direction. So what does this mean? To me, this is the indicator that the only market currently on the verge of seeing further declines in their pricing is most likely the apartment segment. The row house, it's showing red as well, but that number there is much improved from where it was even 1 quarter ago. The row house segment is doing the right things with its inventory in sales to probably see that red turn to yellow, turn to green as we go through the winter months. The apartment market, though, it doesn't have any of the fundamentals that are pointing to any recovery, at least for the foreseeable future. Now, if you do remember, the apartment market year over year only saw a minus 1.2. Why is it being painted red but only seeing a modest adjustment? It's a good question. It's my belief in the apartment segment. If you've been listening to my updates for the last few years, they've had a rough go. There's not much more to give from a seller's perspective. So I believe they've kind of hit their bottom, and if they can't go any further, they just won't sell. And that's why it's kind of finding itself a baseline. And yes, without more positive things changing, it's not affecting the prices too much more. You can't get blood out of a stone. Okay, that's it for our sales summary, inventory story, and the pricing picture. Now we're gonna spin back over to our advice segments so that you can understand what to do with this info. Okay, welcome to our buyers and sellers segment. Today I put them both into one because I want both the buyers and sellers to hear what I have to say about their respective market. All right, let me start by pulling up this graph for you. What this is sales per week now versus sales per week last year. Top line, us now, bottom line, last year. What do you see? Again, an incredible gap between how much more we're selling now than we were this time last year. Okay, now let me pull up this second graph. This graph is sales per day versus listings per day into a ratio. What do you notice? Most of this graph, kind of that left all the way till like the back third, was sitting around 75%. 75% sales to a listing ratio is a very healthy market. But then what do you see? It starts to trend up, and way up. Where we ended the month was basically as a whole, as a full city, for every listing that happens, we had one matching sale. That is a fast moving market. Okay, now let's pull this graph down and let's pull up this third one so I can continue to paint this picture. This one is months of supply. What do you notice on this graph? On the left-hand side of the graph where it started, we were up higher and it slowly wiggles its way down like the stock market down to where are we now? We're actually at the low point of this entire graph, correct? All of these things together painted this way are telling us one thing. The market's improving as we push through this part of the year. It's improving, the pace is increasing, and it will feel now like we typically would feel kind of in a spring market when things are supposed to be rocking and rolling. So for the buyers listening to this, what does that mean? Well, that means that when you see something great, there's a very good chance it will get scooped up in pretty short order. So you need to be aware of that entire picture. So as a seller, do you benefit from this market? Heck yes, you do. What we're also seeing is that the final sale price to list price ratio is even tighter right now. So that's gotten better, so that's in the seller's favor. As well, the days on market has also gotten shorter. So as a seller, that means you can basically plan and then follow through with it because the market is doing all it's supposed to so that you can manage through your next life transition and then the goal to sell your home and do whatever is next. Now, as a buyer, you might think, well, maybe now is not the time to buy. If I'm getting into the real estate market and I'm acquiring a home, putting my blood, sweat, tears, and equity as a down payment, I want to know that the market is healthy. So yes, it will feel a little tighter, but you can know you're moving into a market that is in a healthy condition, not one that could be slipping away, which is what we've had to think about in the prior years. So I'm gonna pull up 4 different charts showing the months of supply for each one. Let's go first with this one. This is the detached market. Again, it's leading the way. It makes sense. It's led the way in everything else. Of course, it will have the lowest month of supply. So if you're new to this term, what does that mean? Months of supply means this. If we don't list another home, that number on the far right side, which is currently right about 2.2, it would take about 2.2 months at our current sales pace to completely sell through the entire inventory on the active market. 2.2 is a very fast moving market, and that's where the detached homes sit. So will that scenario even play out? Of course not, right? Sales will slow as we trend into November and December and January. And of course, new homes will hit the market. So we never actually have to go through that 2.2 and realize how fast that market would get completely depleted. It just doesn't happen. Okay, this next graph, this one is focused on the semi-detached homes. It again is showing that it's continuing to trend down, 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 down. And where we sit right now at the end of October is just under 4 months of supply. Again, very balanced, quite healthy. Now this graph right here, this is the row house, the townhouse market. It's also almost in the same place as the semi-detached, just under 4 months of supply. Its path to here was a little less jaded, and it's been quite of a smooth transition all the way to now. And then we have the apartment segment. What do you notice here? This one is again the worst performing when it comes to months of supply. Just too much on the market. And where we finished October was at a number of 6.5. So again, if we painted that picture, no new listings hit, and the current sales volume happens, it would still take us about 6.5 months to fully sell through everything. Now that's not a healthy market. That's not a fast market. When you are an apartment owner, you need to be aware of this. When you're an apartment buyer, this will help you greatly. To me, showing you these graphs is very important. I call this the pace of the market. As a buyer, you need to be aware of how fast things are selling through. As a seller, you also need to be hyper aware of this so that you can strategically place your property's list price on the market to get a successful deal for you and to transition your family to that next plan. So in general, what's my advice for both you buyers and sellers? This year is proving that we can't just discuss and make our decisions based on seasonal norms, right? If you're hearing it's that time of the year where things start to slow, or if you're hearing things where you're not getting specific information about how 2020's fall and winter market is operating, you're getting the wrong advice, you're being ill-advised. Make sure this year, more than any I've seen in a while, is do not just make a decision based on general Canadian seasonal norms. As always, if you're looking for some specific information about what you're trying to accomplish in real estate, please reach out to us because we'd love to set you up with one of our agents focused in either your property type or your area of the city. So please don't hesitate, message us, we will hook you up right away. All right, let's finish up with our advice for investors segment. As an investor, you're probably listening through those ears of, I'm getting hungry, I'm getting frothy, I want to take advantage of the winter market. Now, if you've been listening to this entire update, you'll know that now probably isn't the time to secure an incredible deal way under market price, and that you might gear your investment strategy more to that awesome cash flow opportunity that you grab right now. Now, I'm not saying that those deals aren't fully out there. We are presented options like this day in, day out, but there's not a ton of them right now. Now, what I'll also say is, if an agent is speaking to a would-be seller out there, and that agent's providing the proper advice based on all of this information that I've been sharing with you today, they're gonna realize that testing their potential sale price on the open market right now will probably provide them the results that they're looking for, rather than having to put this fire sale price out to the market. Now, once again, that is all markets except the apartments. Now, you've heard me say this before, and you may not be an apartment-focused investor. But again, something came across my plate last week with one of the big Calgary home builders. Because the inventory is so sky high in that segment, guess what? These new build apartment builders who are putting property out to market and trying to achieve pre-sales, they're having a hard time because they have an incredible amount of resale competition on the market that is pulling people away from their would-be new build. That new build product that they're trying to sell is having a ton of competition in the buy now, occupy now group, which is the resale market, versus the buy now, occupy later thing that they're selling. So if you are okay with a buy now, but occupy into the future, I am 100% certain that you'll be able to find yourself a sweetheart of a deal so that these builders can push their new build product through and get it from pre-sale to construction to completion, that's where they make their money. They don't make any money if they can't get the build off the ground. So that's it for the investors. If this is of interest to you, hit us up again because I have a few projects that I know would be ripe for this type of investing. But you gotta reach out, Darren at redlinerealestate.ca, and then we'll put you in touch and strategize this with you. Okay, there we have it. Another monthly market update come to an end. My time with you today is almost over. If I sum up all of this, October performed incredibly well. Sales were up and inventory's down. What it's doing is providing us this additional level of security going into the cold winter months, when not only do sales typically slow down, but I know in our great city, we do expect some other financial issues to come to play as the government programs continue to roll out, which will change the employment picture of many large companies in town. I'm very cognizant of that and the potential downside of it, but I'm very optimistic about this security and this buffer we've created going into these months. As always, this changes month by month, and you know I'm going to be here reporting the best and most relevant information so that you're the most informed as you look to make your real estate buying and selling decisions. Thanks again for watching. If you haven't yet subscribed, please do that and put some comments. We'd love to know the sections you love.